Another weekly summary, and we're getting more and more closer to the end of the year. Let's summarize everything that went through in the market this week. I'll try to create some kind of buckets in order not to just throw on you different pieces of or different highlights. We'll start with summarizing everything that happened in the indices, of course, in the market, and then we'll dive into major news that happened during the week, and we'll get ready for the week ahead. So everyone, welcome. I'm Micha Stocks, from our channel Stock Talk with Micha Stocks, where you can subscribe if you're not subscribed yet. Here on the subscribe button, you can then press on notifications all, and you'll be notified every time a new video is uploaded. And we are starting. Here we go. Major averages. Dow Jones down 2%, S&P down 2.5%, Russell down 2.5%, NASDAQ down 2.6%. Looking at the different indices, you can see that utilities was the only sector that was positive this week. All the rest were negative, led by energy and communication down 6% and 5%. When we dive into the Magnificent Seven, Amazon and Microsoft, after solid reporting this week, up. Microsoft up 1%, Amazon up 2%, and on the flip side, we have Nvidia, Tesla, Apple, Meta, all down between 2 to 3%, and Google down 9.9% after they reported their earnings, which weren't bad. The only thing that didn't grow as expected was their cloud, and they weren't able to resolve the cloud hesitance or the cloud growth questions during the call, and that's why the stock was hammered after the report. On the Bitcoin side, on the crypto side, we see Bitcoin up another whopping 8%. Ethereum is up 4.5%. And when we look year to date, Bitcoin is up, you can see it here on the right-hand side, up 105%. And Ether is up 48% year to date. Looking at the heat map, looks more like the red map. Most of the companies in the S&P 500 are red. Some very small amount are green. Those are IBM, Raytown, O'Reilly, Merck, Verizon, and others, but most of them are on the red side. When we look at the different, let's call macro reports that we got this week, we got Q3 GDP, which grew at a rate of 4.9%. It's very, very strong growth on the GDP. Again, raises the question about a recession. From one side, you hear the negativity from forecasters and analysts that are saying a recession is imminent. On the other hand, you see GDP growing at such rapid pace, which is fueled by strong employment and spending from the consumer. When we look at the PCE, and we thank Kathy Jones for the information from Schwab, we see PCE for Q3 again going down at right now edges to 2.4%, very close to the Fed's 2% target. And why am I looking at the PCE? Because this is the Fed's more likable measurement. So this is good if you're in the camp of rates should come down. And this is the Kobayashi letter, which recognizes the fact that mortgage applications are now down 50% since the start of 2022. That's how difficult the market is, especially if you're in real estate. And it means that sellers are not selling, buyers are not buyers. Everyone has their own reason. Buyers don't want to pay 8% mortgage. Sellers don't want to sell their house and then buy a new house and pay 8% mortgage. Basically, 8% mortgage is the problem. When we look at the earnings for the week that has passed, we see all the different companies. If you want to summarize everything, Snap, Meta, and Google a bit recognizes the fact that the war in the Middle East reduces spend, at least marketing spend. Intel, very good recovery story, stellar results. Ford, we're going to talk about them later with the strike itself. Cannot provide forecast because of the strike. And we have the different energy companies, which none of them, if I'm not mistaken, beat on both revenue and earnings. Most of them beat on earnings, but not on revenues. What else did we learn this week? Visa said the consumer is still strong. Other companies are not seeing yet any weakness on the consumer side, but we might see that the week ahead. This brings us to the first topic of our summary, which is Bitcoin. Everyone is waiting for the spot ETF to be approved. There are about 8 different spot ETFs that should be approved for Bitcoin. I believe that once they will be approved, they will all be approved at the same time. Behind the scenes, BlackRock is pushing it very heavily in order to be approved, and there are rumors that it will be approved during October. The reason why I'm mentioning that at the beginning and not at the end is actually a report that came out during the weekend. This is Eric Balchunas from Bloomberg that identified huge inflow in the week that just passed to another ETF related to Bitcoin, which is called BITO. It's not the same thing. It doesn't buy any Bitcoin. It only trades future contracts, but it did see an inflow of $1.7 billion, or actually traded $1.7 billion last week. Why is that relevant? Because it was the second biggest week since the wild week, which was their first week, meaning there's a lot of interest in being involved in what is going on in the crypto space, in the Bitcoin space, and when it will be approved, of course, we will see an increase of everything related to crypto. So keep an eye on that. When we look at the strike, I believe that Monday morning we will probably hear from all the companies that the strike is over and they reached an agreement. Ford during the week was the first one that said that they have reached a tentative deal. While I'm recording this, apparently Stellantis is the next to sign. GM is probably going to sign the same contract. Bottom line, they're going to increase their pay by 25% in 4 years. Apparently, the strike worked for them. But on the GM front, or the impact of the strike, we can see on GM. GM scales back their EV plans. They blame the buyers, but since we know that Tesla keeps selling more and more cars, blaming the buyers might blame the car strategy or other things. But the fact that they had so many shutdowns and now they're going to increase their spend on salaries created the situation where they need to push forward at least a year, if not more, their EV plans. The result of that might be that they'll get to a point where they're not competitive enough. GM just came out and said it, but also Ford. On the GM front, there is even more complexity. Their autonomous unit called Cruise, we'll get to Karen Feinerman in a second, called Cruise, lost their permit in California. We're going to talk about the impact of this in a second, but the result of all the problems GM is having is Karen Feinerman, which I had her as a guest on my Hebrew channel a year and a half ago, which stood by GM for this whole time, came out this week on, she's a panelist on a show on CNBC every 5 p.m., and she said she is selling her GM stake, which is very dramatic because she defended GM, low PE, and all that. So that's GM for you. Let's go back to Cruise. So Cruise got their permit suspended. Then they came out and tweeted that they want to rebuild public trust. Why did they get their license suspended? Because there was an accident and apparently the car didn't stop. And actually, we can if there was a driver behind the wheel, we would have called that a hit and run. They didn't run that far, but they still continued to go. But this tweet grabbed my attention because at the end of it, they said they are stopping all of their driverless operations, not only in California, but across the US. Taking it a bit forward, then we started to get some more information. Apparently, not only that there was an accident, but the video, and I'm saying apparently because I'm not sure this is exactly what happened, so take it with a grain of salt. Apparently, what they did is they sent an omitted video of the crash to the DMV, basically manipulating evidence. Now, again, I'm not sure that's what happened. Consider it a rumor, but I've heard it from several sources, so it doesn't seem like just a bogus rumor. Jamie Dimon, JP Morgan CEO, informed everyone that he's planning on selling 1 million shares of JP Morgan. He hasn't sold in years the share of JP Morgan. You can ask yourself several questions. One, has JP Morgan peaked? we know that they're not in all-time high. On the flip side, you might ask yourself, is he planning something else? Maybe he's planning his retirement. Maybe he's planning to do something else with his money. But it's very interesting comment that he gave to Bloomberg. All this, of course, resulted in JP Morgan stock going down, ticker JPM. And this is the best pick that Morgan Stanley was able to pick for their next CEO. Leslie Picker is interviewing the best pick for Morgan Stanley, which is Ted Pick. Now, I think I oversold the Pick situation, but Ted Pick is going to be the next Morgan Stanley CEO. He's sitting alongside Gorman, their current CEO, and no doubt the Pick reference can't be better when you pick a new CEO. There's nothing more to say about that. And NVIDIA this week announced that they're teaming up with ARM in order to produce new chips for PCs that will challenge Intel. Intel had their earnings report this week. They said they were asked about that. Pat Gelsinger mentioned that ARM basically creates the architecture for the low-end chips, and they're not afraid of that. And also, if the chips will be ready only 2025, they will be in two generations ahead of NVIDIA and ARM. A lot of information, but one thing is important. If NVIDIA is diving in head forward to the PC era, it would be very, very interesting, no doubt. Those were the headlines for the week, or the major headlines. I believe that we are at a point where the market would need to decide if we're going up or down. Let's dive in and understand why. The week that we are going into is the biggest earnings week in the calendar. You can see here, day by day, the increase. And the increase, basically the peak is Thursday. Over 300 companies are reporting their earnings on Thursday. We're going to dive into who they are in a second. Here you go. These are the most anticipated. There are a lot more than that. So whether it's SoFi or Arista Networks or McDonald's or Pinterest or Pfizer, Caterpillar, AMD, First Solar, whether it's Norwegian or Humana, PayPal, which is trading like it's going out of business, Roku, SolarEdge, Palantir, Shopify, Eli Lilly, Novo Nordisk, Moderna, and more. But everyone will be waiting for Apple. Apple is reporting Thursday after the bell, usually 30 minutes after the bell. It's a make or break week. We are at a very, very important technical point for the S&P. We'll see that in a second. And we have so much information in front of us that's going to be a very, very interesting week. We also have on Monday, Scary Fast event by Apple. So Apple at 5 p.m. Pacific, which is 8 p.m. Eastern, is probably going to upgrade their MacBook lineup. Unless they're going to surprise us with a new product. That's currently the plan. And on Wednesday, if that wasn't enough, on Wednesday, we're going to get the Fed's interest rate decision. Now, the market is not anticipating any increase of rates, but you never know. This brings us to these long lists. These long lists, thanks to Evan, our stock market news on Twitter, is companies or tickers that are hitting 52-week low. We have more and more companies that are rolling over. The big question, as always, is it done? I don't know if it's done, but I do know that when you look inside, and this is the S&P, what you see here is Japanese candlesticks. You see here that if this is a 150-day moving average, we have rolled over underneath. We punctured our support, and basically we are now on the thread of support between 4,100 on the S&P and 4046. These are major supports. If we blow through them to the downside, we might find ourselves around the 3,800, which brings us back to where we were March 2023. If we stand and the bulls come in around 41 or 46 and start pushing us up, it might be very, very interesting from an upside perspective. Add to that the fact that the major averages are at extreme oversold measurements, and this is from the Bespoke website. Add to that the fact that from CNN, fear and greed, we are entering the week at extreme fear at a reading of 24. This creates basically one or two options. I have my own feeling, but we need to see it rolling out as it should. One is we're in front of a major crash. If we're in front of a major crash, none of the things I showed you are relevant, and we might see 3,800. That's option number one. I'm not in the camp of option number one, at least not for this week. I might be wrong. I haven't been in the future. Second option is that we reached a point where we can get a counter rally, again, from an oversold perspective, not because we'll get too many amazing news. We might see more choppiness until we hear the FOMC, until we hear Apple, but this is a make or break week. If we end this week on another down week, I believe that the bulls are going to throw in the towel and we're going to see 3,800. If we see the bulls defending the lines and pushing us forward, this might be the week that we all will remember as the week that has changed the trajectory. How would we know? We're going to be here next week, same time, same place, where we're going to talk about stocks, we're going to talk about the market, we're going to see how we've ended the week. If you enjoyed what you saw, it would be amazing if you can smash that like button. And after you do that, if you haven't subscribed, it would be great if you can subscribe to the channel. I'll meet you next week, same time, same place. Bye-bye.